Depreciation. Well, depreciation is the process of deducting the total cost of something expensive for your business. But instead of doing it all in one tax year, you write off part of it over time. When you depreciate asset, you can plan how much money is written off each year, giving you more control over your finances. Bali, kung ikaw nagmamay-ari ka ng isang business, you can decide on the asset's useful life based on how long you expected to use that asset in your business. And for example naman, kapag ni-require ka ni Internal Revenue Service na yung isang gamit mo daw is for 5 years, pero alam mo naman sa sarili mo na useless na siya in 3 years, you can depreciate the equipment over a shorter time. So, nasa iyo talaga yung final say. Asset. An asset is anything with a dollar value. The IRS also refers to assets as property. It can be either tangible or intangible. So tangible, these are the example: cash, furniture, plants, machinery, vehicles, buildings, stocks, equipment, computer. So a tangible asset can be touched, okay? And the intangible, it is the logo, patents, copyright, brand value, self-developed software, customer data, trademark, goodwill. An intangible asset can't be touched. Pero both tangible and intangible assets can be depreciated. Yun nga lang, yung intangible, tinatawag na po siyang amortization. Some common example of asset depreciated by small businesses includes vehicles, real estate equipment, office furniture, or computer. For example, ito po ang vehicle na nasa picture natin. Bago mo po siya ma-depreciate, nag-set po ang IRS ng guidelines na kailangan nating ma-meet bago natin siya ma-depreciate. Okay, dapat po you own it. Dapat ikaw ang may-ari. Dapat ginagamit mo siya sa business at pinagkakakitaan. And dapat alam mo kung hanggang kailan ang useful life niya. And lastly, dapat alam mo na lalagpas siya sa 1 taon. Depreciation schedule. A depreciation schedule is a table that shows you how much each of your asset will be depreciated over the years. It typically includes the following information: a description of the asset, vehicles ba to, computers, date of purchase, kailan mo siya binili, the total price you paid for the asset, magkano ba siya binili, magkano ba siya binibenta, expected useful life, kailan po ba matatapos yung kung hanggang 5 years ba siya, kung hanggang 10 years, 15 years. Depreciation method use. Ano bang ginamit nating method? Straight line, double balance, so on and so forth. And the salvage value. Pag sinabi po natin salvage value, this is how much you can sell it for once it's past its useful life. Okay? Types of depreciation. There are several ways to depreciate assets for your books or financial statement, but the IRS only allows one method of taking depreciation on your tax return. As a result, may mga business na gumagamit ng isa at meron ding isa pa para sa mga taxes. So magkahiwalay nilang ginagawa. While other choose naman po na isa na lang yung gawin by simply using the tax method of depreciation for their books. So let's look at the option available. First one is the straight line method. The most common and simplest way to depreciate a fixed asset is through the straight line method. This split the value evenly over the useful life of the asset. So the formula will be asset cost minus salvage value divided into useful life. For example, your party business buys a bouncy castle for 10,000 pesos. Its salvage value is 500 pesos. And the asset has a useful life of 10 years. Paano po siya isusolve? Ganito po. Bouncy castle setting business worth 10,000 pesos. So, ang salvage value niya ayon sa straight line method is 500 pesos. So, that would be 9,500. Ngayon, yung 9,500, i-divide natin siya sa estimated lifespan ng bouncy castle, which is for 10 years. And that would be 950 pesos each and every year for 10 years. Bali, ganun lang po kasimple kapag straight line method yung gagamitin po natin. Pare-parehas lang po yon. From year 1 to year 10, 950 ang i-record natin sa financial statement. Okay? Next is the double declining balance depreciation. The double declining balance method is a slightly more complicated way to depreciate an asset. It lets you write off more of an asset's value in the days immediately after you buy it and less later on. The formula will be 2 times straight line depreciation rate times book value at the beginning of the year. For this approach, in the first year, you depreciate an asset. You take double the amount you take under the straight line method. In subsequent year, you apply the rate of depreciation to the asset's remaining book value rather than its original cost. Book value is the asset cost minus the amount you already written off. The double declining balance method doesn't take salvage value into account. Okay. For example, doon pa rin po tayo sa bouncy castle, okay? Na ginamit natin doon sa straight line depreciation. So now, gagamitin ulit natin yung example kanina sa bouncy castle sa straight line method. So ngayon, since the asset is depreciated over 10 years, the straight line depreciation rate is 10%. So in year 1 of the bouncy castle, 10 years useful life, the equation looks like this. 2 times the depreciation rate, which is the 0.10, times 10,000, the value of the bouncy castle. So that would be 2,000. 2,000 ang una mong i-record in year 1. How about in year number 2? So 10,000 minus 2,000 is 8,000. So 8,000 na lang po. So ganito po sa equation number 2. 2 times 0.10 times 8,000. So that would be 1,600 for depreciate sa double declining balance depreciation. At kung itutuloy naman po natin yung pagsusolve hanggang year 10, sa pinakahuli, 268 na lang po yung i-record natin. Kung itatry nyo po siyang isolve, okay? Next one is the sum of the year's digit depreciation or yung SYD. SYD depreciation is another method that lets you depreciate more of an asset cost in the early years of its useful life and less in the later years. The formula will be remaining lifespan divided SYD times asset cost minus salvage value. To calculate SYD depreciation, you add up the digits in the asset's useful life to come up with the fraction that will apply to each year of depreciation. For example, sticking with the bouncy castle example, it costs 10,000, has a salvage value of 500, and will depreciate over a 10-year useful life. For the castle's 10-year useful life, adding up the digit would look like this. So, ganito po ang gagawin natin para makuha ang SYD. 1 plus 2 plus 3 plus 4 plus 5 plus 6 plus 7 plus 8 plus 9 plus 10 is equals to 55. Okay, the formula will goes like this. So, 10 divided by 55 is 1 times the value of the bouncy castles, 10,000 minus the salvage life is equal to question mark. So, 10 divided by 55 para makuha natin yung fraction nito times 95. And that would be 1,727. Yan po ang i-record natin sa year 1. How about sa year 2? Okay, sa year 2 naman, dahil tapos na tayo sa 10, yung 9 naman ang kukunin natin. It's 9 divided by 55 times 95, and that would be 1,555. Ito naman po ang i-record natin sa second year. At kung i-continue po natin yung pagsusolve hanggang last year, ang pinakahuli pong lalabas dyan is 173. So, next kind of depreciation is the unit of production depreciation. The units of production method is a simple way to depreciate a piece of equipment based on how much work it does. Unit of production can refer to either something the equipment creates, like widgets, or to the hours it's in service. The formula will be asset cost minus salvage value divided by unit produced in useful life. So how it works, using the formula above, you figure out the dollar value in depreciation for each unit produced. By adding up all the unit produced in 1 year, you get the amount to write off. Once all the units have been written off, depreciation of the asset is complete. Its useful life is technically over, and you can write off any more units. For example, since hours can count as unit, let's stick with the bouncy castle example. Let's watch this. Para naman po makuha ang ating unit of product depreciation, since hours can count as unit, let's stick with the bouncy castle example. Remember, the bouncy castle costs 10,000 and has a salvage value of 500. So its book value is 95. Let's say that according to the manufacturer, the bouncy castle can be used a total of 100,000 hours before its useful life is over. To get the depreciation cost of each hour, we divide the book value over the unit of production expected from the asset. So, 9,500, the book value, divided by 100,000. Yung 100,000 po, bago masira yung bouncy castles, kailangan daw naka 100,000 hours siya. So, that would be 0.095. Okay. So that's an early depreciation. So in the first year of use, the bouncy castle is bounced upon for a total of 12,000. Let's say 12,000 hours sa unang taon na nagamit natin yung bouncy castle. So ito times natin siya sa 0.095. So ang first year natin ay 1,140. Ayan po ang i-record natin sa year 1. Ano naman po ang i-record natin sa year 2 hanggang year 10? So, dapat hindi lang po tayo lalagpas sa 9,500. Depende po kasi yung oras sa pagkuha ng i-record natin. Next is depreciation journal entry example. So, kung nakikita po natin dyan, account, debit, and credit. If you want to record the first year of depreciation on the bouncy castle using the straight line depreciation method, ganito po ang gagawin natin sa journal entry. Account, depreciation expense, debit is 1,050. While the accumulated depreciation naman niya is 1,050 pa din. Depreciation expense is the amount you deduct on your tax return. Since it's an expense, you record it as a debit. Accumulated depreciation is the total amount you subtracted from the value of the asset. Accumulated depreciation is known as contra account because it has a balance that is opposite of the normal balance of the account classification. The purchase price minus accumulated depreciation is your book value of the asset. Since it's used to reduce the value of the asset, accumulated depreciation is a credit. Okay? Last, is depreciation a fixed cost? Yes. Because depreciation is a fixed cost using most of the depreciation methods. Since the amount is set each year, regardless of whether the business activity level change, okay? Pero may exception. Yung unit of production method, hindi po siya fixed cost. Because under this method, the more units your business produces, or the more hours the asset is in use, the higher your depreciation expense will be. Thus, depreciation expense is a variable cost when using the units of production method. And that would be all. May question po ba tayo? Kung wala, thank you so much.